Hello, everyone, and welcome to our latest ALTA Insights webinar. I'm Jeremy Yohe, Alta's Vice President of Communications, and today we've got a great presentation lined up to discuss the evolving way people are sending and receiving money digitally. Before starting, I do need to touch on a few housekeeping items. Today's webinar is being recorded. You'll get an email with a link to the recording, and you can always access all of our webinars on Alta's website at alta.org/webinars. The email you get tomorrow will also include a link to download today's presentation as well as the recording. If anytime you have a question during today's presentation, we'll hold a little time at the end for Q&A, and the contact information for the presenters is on that first slide, so please feel free to reach out to them if we don't get to your question. It should be noted that today's webinar we offer in CE and CLE credit for many states. Credit's only available to those attending the live presentation, and our platform tracks attendance, so you'll be wanting to pay attention. To meet compliance with many state requirements, we'll have a few poll questions during the webinar, making sure you're paying attention, so no multitasking out there. And at the end of the presentation, I'll post a link in the chat box that you'll need to go to and provide us information so we can report your credit. For any questions regarding continuing education credit, please email education@alta.org. We do need to thank SoftPro for sponsoring today's Alta Insights presentation. And before we get to today's speakers, we need to share a short message from SoftPro.
Introducing SoftPro Banking. With SoftPro Banking, users can securely send and receive wire transfers from within SoftPro Select. Now you can manage wire transfers from a network of integrated banks across the US, all without leaving your SoftPro Select software. Users can seamlessly receipt incoming wires to the appropriate ledger, approve or reject outgoing wires, and view all wire details with the click of a button. SoftPro Banking's sophisticated security permissions allow for the designation of specific users as approvers for outgoing wires, ensuring that your wire transactions are in the right hands. Let us show you how SoftPro Banking can save you time and simplify your workflow. Learn more at www.softprocorp.com/banking.
Okay, all right, thank you, SoftPro. Timely message, and that's really what we're here to talk about today. Transferring money digitally. Let me get into introducing today's speakers. First, we have Rick Brune. Rick is head of commercial deposit and payment solutions at U.S. Bank, also a fellow Ohioan, Houday, to the Cincinnati Bengal Nation. Next, we have Christopher Holtzman. Chris is Vice President Corporate Underwriting at First American Title Insurance Company. And also joining us is Jason Nadeau. Jason is Chief Digital Officer at Fidelity National Financial. Jason also serves as chair of ALTA's Digital Process Impact Work Group. Chris is also a member of this important work group. And Rick's attended many ALTA events and really understands your business. Rick, before I turn the conversation over to you, we do have one of those poll questions that I said I was going to ask everyone. So right out of the gate, we're going to launch this poll and see if everyone's still with us. So take a quick moment and launch the poll here. There we go. Well, there we go.
I'm disappointed we don't get to answer the question, Jeremy. I was curious to see if Rick knows what it is.
We can only hope.
All right. Real-time protocol, return to player, real-time payments. All right, we got about 87% real-time payments. No one's going with the casino lingo here, real-time player. We'll close that. Interesting though, 13% has said real-time protocol. So let's close that. Show the screen back again. And there we go. All right, Rick, the stage is yours.
Hey, awesome, Jeremy. Thank you. And really excited to be here today to talk about real-time payments and digital payments really overall, and how it really impacts both the banking systems as well as your guys' world within the title and escrow industry. And really happy to be able to share the stage here with Chris and Jason on this very timely subject. So if you want to go to the first slide there, Jason or Jeremy. So we'll talk about, RTP and what is RTP at the end of the day. Real-time payments was the first new payment rail developed in the United States in the last 40 years. We probably have participants on the phone that are younger than 40, so this is probably the only payment rail ever created in their lifetime. So some interesting history. The U.S. was a little slow to adapt actually to the real-time payment journey. Japan initiated the very first real-time payment rail in their country back in the 1970s. And by 2010, several other countries had done it. UK, China, India had developed their own real-time payment networks. And the United States launched RTP, the clearinghouse launched RTP in the US in 2017. And at that time, it was a little different than it is today in the sense that there weren't as many institutions enabled on the RTP network through the clearinghouse as there are today. And the limits for payments within RTP at that time were only $25,000. So you could not initiate a payment over the RTP network over $25,000. Now that has grown tremendously over the last 5 years, and even more so during the pandemic. RTP became a more widely utilized payment platform during the pandemic. We saw payment volumes across the network rate go up quarterly from about 10, 12 million payments a quarter to, this first quarter of 22 was about 36, 37 million payments and about about a little north of $16 billion in total value that was transferred over the RTP network. So, today 54 countries around the world have different RTP rails. The US rail, RTP rail, is domestic only. So something to really keep in mind there, you can't utilize it to send an international payment. That would have to go via wires. One other, unique thing about RTP that is drastically different from, historical legacy payment systems. So when you think like wire and ACH, in those systems, payment information historically has only flowed one way, right? From the payer to the payee. So if you're sending somebody an ACH or a wire transfer, whatever information you list on that wire payment is the only way to get information. The only other way to find out data or info on that is through email, phone calls, etc., outside of the payment system. Within RTP, the clearinghouse built out the capability to have bilateral communication within the payment system. So if a receiver, whether it's a title company or consumer, whomever receives an RTP payment today, and they're not exactly sure what it's for, there's a request for information functionality within the RTP network where they can request information through the banking system, through the payment rail regarding that payment, as opposed to trying to track down somebody to email, so on and so forth. And then I'll touch on a couple of the high level perks real quick before we get into how it works. one of the nice things about RTP is it has the ability to move much more vast data with the payment. So you can move, ISO 20022 rich data through the payment rail, providing even more detail than you've ever been able to provide on a wire transfer with the payment itself. So, no more being limited to 35 characters on each of the additional data lines, within a wire transfer. One of the other neat features as well that I think is pertinent, especially to the title industry, is there's actually a confirmation of payment that is received by the payer when your recipient receives and the actual RTP payment settles. So there'll be you should be able to get that notification through however you interact with your financial institution. The big key benefit, right, with real-time payments, as some of you may or may not know, is they can be initiated 24 hours a day, 7 days a week, 365 days a year. If you need to initiate an RTP on Christmas Day at 8 p.m., you can do that, and it will settle in real time. RTPs generally have been settling in the neighborhood of 5 to 15 seconds after initiation to the payee. We talked about the additional remittance data. So, and then the only other thing I would add as a huge benefit and perk on RTPs are anyone you're sending a RTP to. So whether it's a consumer, or real estate broker, agent, and we'll get into some use cases later, but it's free for them to receive an RTP. Unlike today, where if you're wiring, a real estate broker a commission payment, right? They might get dinged by their institution for $20 to $30, right, for an incoming wire fee, and that doesn't exist within the RTP network, which is a huge benefit. We can go to the next slide, Jeremy. So how does it work? What does RTP look like? And to be honest, not vastly different than how you interact today with your bank to initiate a wire, right? You'll log into your bank software, you'll initiate the real-time payment, the same virtually that you would a wire transfer, right? With a account number, routing number, and beneficiary's name. And the major difference there is, as opposed to going through the Fed, it goes through the clearinghouse's rails and directly from the initiating bank to the receiver's bank. And as we talked about on the prior slide, you can attach vastly more remittance data along with the detail for the payment to help the receiver understand what exactly it's coming for. So is it related to, John Smith's closing, or, is it a payoff for, a John Doe's loan and the loan number and as much identifying information as you possibly can send and want to send, you'd be able to.
And where this, real quick, Rick, just to add one comment real quick. You mentioned it before, and I'll mention it again on this one. The point Rick is making about the additional remittance data is really important, especially for those of you that are on sort of the technical side like I am. The ability for us systematically now to do a much higher percentage of actual matching of incoming funds, where wires, we attempt to do some matching, but it is sort of hit or miss, and you do still end up with a lot of stare and compare on escrow or on your accounting team. This will cut down a lot of that. It does really just provide a lot more metadata that allows us to identify those funds coming in and just take away some of those human processes that can be frustrating, especially at the end of the month when you've got a lender or somebody crawling on you asking you if you've got the wire funds in yet or not. The system can reconcile it a whole lot easier now.
Yeah, exactly, Jason. And then the other last thing I would add on here on this slide, so for the receiver, it looks just like a wire to them, right? So you have the same finality of payment that you do with a wire transfer. It can't be called back. To get a RTP back is virtually the same as trying to get a wire back. It's, working with your institution to work with the beneficiary institution in order to get those funds back. The one caveat to that I will add is the RTP network does have a request for return functionality, and it's just that, it's a request. But within your how you integrate with your bank and how you work with your bank, you'd have that ability within their software to request a return. And what that means is if you initiated the RTP payment somewhere and let's say it went to the wrong place, wrong bank, wrong individual, I mean, you can request for that payment, but that individual would then have to go in and acknowledge and return those funds back to you. The only other way, again, is much like it is with a wire transfer today, to go in and contact your financial institution and have the banks work together to attempt to recover those funds ultimately. And then the other interesting thing is, within RTP, if the receiver receives the payment, they're not exactly sure what it's for. Maybe there was no data sent with it. There is the request for information functionality within the RTP system, so that if you received an RTP, again, uncertain what it's for, you can send a message back to the originator asking for some additional information related to the payment, which would then pop up for them within their commercial banking system that they utilize for their financial institution. All right, we can go on to the next slide. A few differences that we'll talk about here, and similarities, right, primarily between wires and RTP. I put in the data as well on ACH. I know it's not widely utilized within the title insurance and real estate settlement world, and we all know the reasons why, right? Because it can be clawed back. There's a lot of protections in place for the consumers, when there's an ACH involved. And RTP, much like a wire, as we talked about, right, irrevocable. You have that finality of payments, that hits your account, or your client's account, right, when you initiate the payment. More data can flow with the payment again, and Jason just highlighted on exactly why that's important, from a reconciliation standpoint, and can help expedite and speed up the ability to do just that. RTP, as we talked about, right, real-time availability, it's 24/7, 365. So, you've got a seller and a buyer that want to close at 6 o'clock on a Friday. I know we probably don't want our employees working that late, right? But you theoretically could do that, and sign the papers and still be able to initiate the payments out after what would be your typical Fed wire cutoff times. And that's the other main difference, right? So you no longer have to live within the Fed window for Fed wire cutoffs if you have the ability to use RTP. Right now, today, the max payment amount that you can make through the RTP network is $1 million. When it was originally launched, it was $25,000. It was increased, gosh, I don't remember, 18 or 19 to 100,000. And then here this past April, the clearinghouse raised the limit from $100,000 to $1 million, which made it a more attractive payment rail really for the real estate settlement space. At $1 million, I think you can cover, and Jason or Chris can correct me if I'm wrong, but probably north of 90% of real estate sales transactions across the United States. Obviously, there are some markets where $1 million may not suffice, but it does cover a vast majority of transactions nationwide today.
Rick, can I ask you a question? I think it'd be helpful for the audience. If I'm using one of these, apps to transfer money between, I'm not going to name any names, but there's a number of them. We all are familiar. We go out for dinner and I'm splitting the bill with you and I send it to you, whatever the case may be. Regardless of whether it's 8 p.m. at night or 9 a.m. in the morning, it shows on the app that the money's immediately been transferred to you. So is that using a real-time payment system, or is that using an ACH?
It is not. So, if you think of those peer-to-peer type payment rails, they use a vast number of different capabilities to move money. Some are moving to using RTP to settle transactions, but I think one of the major things with two of the three, is there's really no settlement necessarily, right? So if we go out to dinner, Chris, and you send me, you Venmo me or PayPal me $50, right, for your part of the dinner. While that money may come out of your DDA account, checking account today, it settles to my PayPal or Venmo account. It doesn't technically settle within the financial network, right? So the funds are mine, but then I have to request to move those funds again. And, depending on which, system or which rail you're using there, some of them are settling via ACH. Some are giving you the capability to utilize RTP to settle and get it in real time, but they generally charge you a fee to do so. Whereas if you go over the ACH rail and get it in 2 or 3 days, it's free to get.
Yeah, that's really helpful, I think, because when you look at the app in that scenario, it shows that the money's immediately gone from my account and immediately available in yours, and that may not necessarily be the case.
Exactly.
Well, and I think that's what I think has, at least from my point of view, guys, why RTP is so exciting to me, because ACH or these other ways that we've moved money, Rick, with these different types of apps, and we got used to using Venmo and PayPal and all these types of things for our normal everyday business. So then when it comes time to do things like provide earnest money or provide some money to closing, we think, oh my gosh, why are we still in the 70s trying to bring a check to the table? Well, of course, it's because the ACH, no matter what you do, no matter how many banks you move it through or what shell game you play, it still is ACH. It still has a lot of trouble with good funds, has a lot of compliance issues, doesn't really settle, lots of issues. But we've wanted to use it because we know consumers like that kind of real-time capabilities and like that type of app-based capabilities. So now what we've got with RTP that is so exciting is you have the ability to do those types of app-related money transfers, but to do it more like it's a wire, where it's safe, it's final, it's good funds. Somebody's not going to move into the house and decide that is not brown. I thought you said that it was brown carpet. That's teal carpet. I'm calling back my earnest money. Give me my money back. And the escrow companies are short funds all of a sudden and all that good stuff. So it's a pretty exciting new tool that's coming our way, I think.
It's a great point, because the dynamic in the way consumers have shifted it, and a consumer may use an app to make payments a couple times a week or a month or even a couple times a day for varying amounts. Could be small amounts, could be reasonably big amounts, but they're only buying a house every so often. So right. They have expectations that may not actually be feasible or reasonable under the circumstances, and it's a lot of times it's our job to educate the consumers.
Well, and there's also, especially, as we've gone into this rapidly increasing interest rate environment, one of the things we're seeing a lot of is now people saying, oh, wait a minute, that earnest money I put down on that house, I've now decided my new payments at my new interest rate don't look so appealing anymore. I want to bust out of this deal. And we're seeing it happen, unfortunately, a lot right now. And the nice thing about making sure you have good funds, which I know, Chris, you're going to spend time talking about, is that consumer can't just reach in and say, I don't want this house anymore. I'm taking my money back like they can with ACH, right? RTP allows us to keep our fiduciary duty and our steward as an escrow agent to keep those funds and hold those funds and only disperse those funds based upon the terms of that agreement, whether it's busted or not, which is what good funds laws are about. So that's why RTP is exciting, is it allows us to continue to fulfill that obligation we have in escrow, but still provide all the cool new digital toys that everybody expects. So.
Yeah, totally agree, Jason. Great question, Chris. And that's obviously the one big unique thing with RTP, and I think when people start to utilize it and they start to utilize it outside of normal business hours, that's when they start to see the full impact of it. When you send somebody or somebody sends you an RTP transaction for $100,000 and it actually hits your account on Sunday showing there available final, you could turn around and resend it back out 5 minutes later if you wanted to. So,
well, certainly nice for operations that are in Hawaii and on the West Coast that have a pretty short Fed window from normal business hours, for sure.
Yeah, you're exactly right, Jason. Excellent. We can move to the next slide, Jeremy. So this slide just kind of recaps some of the things we talked about previously, right? So, again, to kind of recap, you have that immediate availability, finalization of funds, they can't be called back, can't be recalled, any of that stuff. Obviously, we beat to death, I think, the rich data integration that is there and able to be sent with a real-time payment. And the uniqueness, right, of that bilateral communication within the payment system to be able to communicate back and forth between recipient and sender within the payment system without having to, utilize unsecured channels, whether that be, phone, email, text, etc., to do that. And then obviously 24/7, 365 functionality to move payments. Some of the ways we've seen, RTP be used, we've talked about, the peer-to-peer piece, right, where we're seeing some of those types of entities utilize RTP for settlement into, consumer accounts ultimately. We're seeing it kind of in the bill payment space as well, where client or companies can request payments from consumers to pay everything from utility bills to a loan to all kinds of other things that are out there right now. And we're seeing it businesses paying consumers. So we've done some work actually with lithium motors driveway, so a competitor with like Carvana and them, where they're actually using RTP to pay consumers when they buy vehicles from them when they pick them up. So when they pick up the car, they can initiate a payment right there at the consumer's driveway and immediately receive those funds. So obviously those are outside of the purview of this space, but it kind of ties into some ways, I think we can all think about how to utilize it. And as well, I think we talked about, the rapid settlement. So most RTP transactions are settling in 15 seconds or less right now across the network. And one of the other things I'll mention is only established commercial banking customers that have access to their bank's commercial banking platforms today can initiate a real-time payment. You can't go into a branch to initiate a real-time payment, any of that, like you can with wire transfers today. So the people that are on the RTP network sending payments are entities that have been thoroughly vetted and gone through the KYC AML processes at their financial institutions. And then the other thing that we really haven't touched on that I'll mention here too is that RTP is vastly cheaper than wire transfers today. We already touched on the note that you don't get dinged for an incoming fee on an RTP transaction. But you can send, depending on the institution, 6, 7, 8, 9 RTPs for roughly the price that you're paying today to initiate one wire transfer. So a drastic cost savings for when and where you can implement RTP into your practices. We can go to the next slide, Jim. So, some risks around RTP that I will tell you, with RTP, it's still account number, routing number based today. There's some tokenization capabilities that are coming in the future around RTP that will help with some of that. But, again, still beneficiary name, account number, routing number. So you could still technically be duped right into sending an RTP transaction to the wrong beneficiary. And then, right now today, roughly 61% of DDAs, checking accounts, are covered by RTP participating banks across the country. So there's roughly 300-400 institutions today that are enabled on the RTP network that, like I said, covered north of 60% of DDAs. And actually talking and working with the clearinghouse directly, they'll tell you that there's no one institution that's not currently enabled on RTP that would even move that dial 1%. So most of the institutions that are not covered today are smaller institutions. They're not the large household names, regional players, et cetera, within the space. So we'll move on to the next slide around RFP. Oh, nope, we have another poll question.
Yeah, Rick, let me jump in, make sure everyone's still paying attention, which I think they are. We've received a lot of questions, so hopefully you guys are ready for the Q&A here at the end. Let me launch the second poll question here. leads us into the discussion on good funds, the failure of what company led to the creation of these good funds laws. A little obscure, and we're not touching on it in the presentation, but the answer is actually Abbey Financial Corp. I did not know this, so we'll go ahead and close this. Hopefully everyone out there is still paying attention and get your credit. So let's close that, and Rick will turn it back to you.
Excellent. Actually, I think we're going to turn it to Chris for good funds.
Oh,
Yeah, perfect. Thanks, Rick. So I'm sure good funds is a term most everybody here on this webinar has heard. So we're going to just go through a little bit of an overview. At its core, good funds laws are designed to protect consumers and ensure real estate transactions can be completed. So generally speaking, good funds laws require an escrow agent or closing agent to have sufficient money in its possession to disperse at the closing. The burden's on the escrow agent to ensure that they have sufficient money for the transaction at hand before closing and dispersing those funds. And of course, just to be clear, when we talk about money and funds, we're talking about US dollars. Now, the exact definition of good funds varies state to state, and that's really important. There's no model good funds law, not at least that I'm aware of. And some states provide broader definitions of what good funds are, and others provide more narrow or very specific definitions of what constitutes good funds. For instance, there are some states that specifically call out which forms of money would be considered good funds, such as cash, wire transfer, or bank cashier's checks. Some states even allow a personal check or an ACH payment up to a very, very small amount, I think $1,000 to constitute good funds. There's of course some risks there for all the reasons that we talked about before, but that's some of the uniqueness around these state good funds laws and why it's really important to look at your the good funds law in your state. The key here to remember is that good funds generally are 1, irrevocable, and 2, immediately dispersible on receipt. That's really the key. And you know, we talk about why are they important, and I think we've kind of touched on at a high level some of the consumer protections that are there. And so at the federal level, there are consumer financial protection laws that give consumers the ability to reverse funds for a certain number of days. I believe it's up to 90 days for certain specified reasons, such as fraud. Jason mentioned the situation with the carpet. One had come to my mind a couple or during the middle of the pandemic and all the supply chain issues where you're buying a home and there's the seller says they're going to leave the washer, the dryer, the stove, and they take it, and then you're stuck waiting 3 or 4 months for a washer or dryer to come in because it's stuck on a ship. Certainly one could see a situation where a consumer considers that fraud on their own and tries to claw back or reverse funds, and that could really cause trouble for an escrow agent. And so that's one of the reasons why these good funds laws are there. We really want to make sure transactions are safe, consumers are protected, and escrow agents are protected. They're here acting as a neutral third party to the transaction. And so a couple things I just want to highlight. The ALTA Digital Process Impact Work Group, which I sit on and Jason chairs, we actually created a couple of very useful one-pagers that are worth highlighting. One is called Digital Funds Transfer Best Practices for Agents, and the second is called Digital Funds Transfer Principles for State Good Funds Laws. The second one, the Principles for State Good Funds Laws, is available on this webinar. The Agent Best Practices will be available tomorrow through that link that will be provided. But if you're interested in it, it is available at alta.org/advocacy/good funds. It's a lot of words there, but if you're interested, it is available. We think it's very useful and helpful. There, obviously, as with all new technologies, there are groups that are looking at amending good funds laws and to allow for these new payment technologies. And so it's really important when you're looking at these to understand the principles for good funds. So we think these are going to be very valuable to you in your state as your, if these discussions come up about amending these good funds laws. So finally, I think that the key takeaways here are, good funds are irrevocable and immediately dispersible upon receipt, and pay very close attention to the good funds laws in your state to make sure you're complying, and that if there are any uses of new payment systems and technologies, that you want to make sure you're complying with those to protect yourself and of course consumers. So with that, I'll pass it back. Is it Jason? Do you have anything to add to that? I think you're on mute.
Sorry, guys. Yeah, one thing I just want to add that Chris and I and a number of others on the ALTA work group that have focused on digital funds, we did do a cursory examination of all 50 states. I'm not going to say that they were done by lawyers. I'm not going to say they're definitive opinion, but we did kind of do a cursory review of them. And I think what's important as you look out, the states that you all would be in sort of fall into one of three buckets. And I think it's important as you look at RTP that you understand your good funds laws. And those three buckets are really states that do not have good funds laws at all, in which case your real concern needs to be your best practices and what you need to do to make sure you're doing your business well and you're doing your responsibilities well, but you don't necessarily have a state compliance issue. And that's where some of those best practices that Chris talked about that'll be available tomorrow on the link are really helpful. There are states where they have good funds laws in place, and those good funds laws, as Chris mentioned, are, say, broad enough to encompass RTP. So they may say something like wire transfer or other electronic payment bank to bank that's not reversible and not recallable and stuff, which RTP is good. And then there are a handful of states, I cannot for the life of me remember one off the top of my head as an example, but there are a handful of states, as Chris mentioned, that got very specific and said good funds are the following, right? Like, a lump of gold, a cashier's check, and, all these antiquated ways to pay. So, in theory, and I'm not a lawyer, I'm a digital person, but in theory, in some of those states, even things like RTP don't constitute good funds because they're not enumerated in the law, and there may need to be some changes in the law. So very important that you work with your appropriate legal counsel or compliance counsel or whatever, or your underwriter, to understand in your state sort of which of those three buckets you fall into.
Yeah, and if there are those discussions about amending the law, please feel free to reach out to ALTA, to Jason and I and our work group, because this is something that we have been seeing, tracking, and trying to help everybody in the states with.
Yeah, that is a very good point. If you are involved in that on a legislative point of view, please reach out to ALTA. Chris and I have personally worked on a couple other states that are looking at modernizing their laws, and ALTA has some great resources to help in those discussions with your state legislature.
Yeah, Chris or Jason, do you guys recall how many ALTA determined might need to be altered to accommodate for?
I don't. It was not a majority, Rick. I don't remember off the top of my head, but I think it was less than a dozen, if memory serves.
Yeah.
But there were some. I want to say Colorado, but I don't want to quote anybody on that. And if you're from Colorado, don't freak out. Go check my math. But there were, a few states like that I recall on the West that were kind of surprising that they did have that in place. So.
Yeah, makes sense. Good information.
Yeah, I think we can go on to the next slide. Perfect.
Yeah, and I realize here I had jumped ahead based on my notes, so I apologize. I already covered the risks before you, Chris. So
I think the only other thing that's probably worth asking about risks, and Rick, I'm going to ask you as the banker in the group if this is a risk, because when you were talking about it, it occurred to me, today wire fraud is a big problem that we all deal with, especially diversion of funds. And we all know that when you've had funds diverted, there's a process you go through to go try and chase that money down, try and lock those accounts, try and keep that money from moving through a mule account and moving offshore and hopefully, get it settled. Some of that, my understanding, is possible because of the inherent lag or inefficiency in the Fedwire system. With real-time settlement on RTP, does that sort of make that whack-a-mole approach that we're doing today to try and catch the horse after it's already out the barn sort of a lot more difficult? Is that a fair assumption, do you think?
The most important thing you can still do, right, is follow best practices as it relates to, acquiring client information for, where funds need to go to. When you
Right.
initiate an RTP, much like when you initiate a wire, you're still initiating it to a DDA account number, a routing number, and you'll have a beneficiary name. And as we all know, under the UCC code, banks aren't required to match the beneficiary name to the incoming payment instructions. So if a purchase transaction and gets duped along those lines, and a consumer gets hacked, and they could still theoretically go to their institution and wire funds to the wrong spot. But a consumer client won't be able to initiate an RTP transaction directly out of their account to a title company. It would still, come via wire, via cashier's check, with the exception of if RFP, which is a functionality as well that we're going to discuss shortly within the real-time payment network, and it stands for request for payment, is utilized, then that consumer can interact directly on the RTP rail with the title company that would have initiated the request for payment to them, to initiate that payment back to the title company. And in that situation, as you and I have actually talked personally, Jason, there's a distinct advantage of RTP to be able to eliminate a large proportion of wire fraud. The challenge with RFP today is it's not widely utilized within the RTP network. There's only a handful of financial institutions, U.S. Bank, Citi, and maybe one other today that have enabled their consumer accounts for RFP, meaning that their consumer clients can receive a request for payment from a RTP initiator on the network.
So that's a perfect setup for you to tell us about RFP.
Exactly. So,
hey Rick,
go to the next slide, Jeremy, and talk about that next.
Yeah, hey Rick, real quick, obviously wire fraud's a big concern for the industry, and maybe I missed it in your answer. Does RTP confirm the account name?
It does not. Nope.
All right.
It would still follow similar to ACH and wires today. Yeah, so as a perfect segue into requests for payment, so I'll kick this off and give a high-level overview of what RFP is. And I think this will dovetail into some things that Jason's going to talk about as well. So I think if you go to the next slide, Jeremy, on requests for payment. So when I first heard about RTP and knew it would have some profound impact on the title industry as a whole, right? When you start to think 24/7, 365, no longer having to, play by Fedwire hours to initiate payments. It extends the ability to close transactions at different times. As Jason pointed out, it gives our friends on the West Coast and Hawaii and Alaska, longer time frames to be able to initiate payments, as opposed to today where, you get into Hawaii, and I think the Fedwire cutoff there is probably around noon, 1 o'clock local time, somewhere in that ballpark. So one of the other really neat functionalities that came out of RTP, and as I mentioned just moments ago, is still being rolled out more broadly across the financial institution infrastructure, is request for payment. And what request for payment looks like. So, as a title company today, you have to provide, wiring instructions to, your customer, consumer, other title company, whoever it might be, right, for where to send funds at closing, ultimately, right, for that transaction. With request for payment, it's a functionality within the RTP network where you can actually initiate a request for payment, just that simple. So as opposed to providing your wiring instructions to a consumer, another title company, a bank, you can actually initiate the RFP that will go directly to that consumer or other title company or whomever, and you can provide the information for what the wire is for. We need $100,000 for the Smith closing on 123 Main Street, right? And if it's a consumer, for instance, myself, so if I'm buying a home and I get this request for payment from Jason at FNF, it's not a text, it's not an email that pops up, something along those lines for me to respond to. It's actually a notification within my banking application. So I'd have to log in, whether it's US Bank, Chase, Wells, whomever, within that application. So you're probably using some form of two-factor authentication, right, to access your personal banking information. And you log into your bank app. You'll review that transaction, what it's for, and then you can either decline it or approve it. And if you approve it, it will automatically send the funds, obviously assuming you have them and available in your checking account, to the title company or the entity that requested the payment, over the real-time payment network instantaneously. So gone would be in a future state where RFP is more ubiquitous across the financial institution and framework. You literally could have a time where you no longer are providing wiring instructions to consumers, and to be able to say that to them from the very beginning of the transaction all the way through would be phenomenal, I think, and drastically be able to cut back on wire fraud, as we were just talking about. With that, I think I'm going to turn it over to Jason, and he's going to talk about some different applications and use cases for RTP and RFP.
Yeah, absolutely. Let's go over to the next slide, but let's just pick up right where you left off on that. The request for payment function. So we talked up until just now, we talked about RTP in terms of dispersing funds out to people. So you're thinking about sending funds out of escrow, and then there's RTP funds coming in, right? And so what Rick talked about, and it's new, as he talked about, just a few of the major banks are implementing it now. Over the next, year to 18 months, we'll see a whole lot more adopted. But this request for pay model, my personal opinion, I'm not going to say it is all of Fidelity's, because I've been proven wrong on more occasions than I care to note. So now Fidelity makes you put an asterisk on it that says anything Jason says will probably be wrong, so they don't get attributed to it. But I think this is going to be a game changer for us, because when we get to the point, it's going to be a little while, but when we get to the point where we can say to our consumers, you don't go to the bank. You're not going to go to the bank and get a cashier's check. You're not going to get a wire. You're never going to send us money. We're going to request money from you. And if we do it from earnest money through to cash to close, so we sort of set up their understanding of how to do it with that earnest money, and then we look at it as the bigger fund. So if it's Chris coming to closing, what I'm going to see as a future world is, Chris, your real estate agent is going to say, hey, Jason, that title 123 is going to be in contact. I'm going to reach out to you, Chris, whether you do it electronically or over the phone, and I'm going to say, who do you bank with? And you say, I'm going to bank with US Bank. And while I'm on the phone with you, I'm going to go like this and say, okay, that $17,000 you need to provide for earnest money, please look at your US Bank app right now. And we'll shamelessly plug US Bank to the rest of our examples here. But Chris, it's going to come up on your phone, and you're going to say, yes, I see that it's $17,000, and it's the title 123, and it's for my earnest money. Approved. That money will come right into my account. Earnest money will be good. And then I'll be able to say to Chris, and Chris, when it comes time to closing, we're going to get money from you the same way. And the really cool thing I'm excited about, and Rick and I have talked about this a bunch, is going to be, I'm not going to ask you to get up the morning of and do it. I'm going to say, come to closing. Because remember, real-time settlement also, right? That's really important, real-time settlement. So that means that Chris can come to closing, he can sign all of his documents, and I can say, okay, we're ready to close. I'm going to send you a request for your $50,000 down payment now for your cash to close. And while you're sitting across the table with me, or while you're sitting there with the notary, you get that request, and Chris says, approved. Those funds are in our account, and we can turn right around and disperse them a minute later. So this whole idea of running to the bank, not only is it so much better for customer convenience, but the fraudster can't jump in, right? One of the things that's really hard right now on the borrower fraud is we're having to tell customers, I'm giving you wiring instructions, but if you get wiring instructions from anybody else, they're not legitimate. And actually, if you get wiring instructions a second time from me, they might not be legitimate, right? That's really hard for a borrower to understand. We're all working really hard as an industry, but that's a difficult message. It's a lot easier message to the consumer that says, no, 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 don't ever go to the bank. If anybody asks you to go to the bank and take out money, that's a problem. Just wait till you're with us. We'll handle it over this app. It'll be really slick. So, when you think about that funds into escrow, I think it's game changer. Now, that is a little ways out, right? We are looking at probably this year, Rick, correct me if I'm wrong, but we are looking at this year, some of the major banks, US Bank being one of them, a couple of the others that he mentioned that are going to be playing in this RFP space. But I imagine a year or so out, it's going to be much, much more common, and we're going to be able to see this idea of a request funds from you into closing, as opposed to you going to the bank or writing a check or using some third-party app or whatever. You'll simply be able to do it right out of your banking app. And then we talk about payments out of escrow. So the part that we talked about up front, which is funds going out, you're talking about funds going out to consumers, disbursements like you normally would do in escrow, and then payoffs. And I'm going to talk a little bit more about these here in a minute. But the payments to consumer is another big one that I think is a game changer. For those of you that operate at any kind of scale or volume, a definite pain point are uncashed checks, right? The state escheatment model, this idea that when it's all said and done and then you reconcile out all the funds and it turns out you collected $1.37 too much for recording fees or something, and you write that check and you mail it back to the consumer who doesn't cash it. So you write the check and you mail it again and they don't cash it. You write the check, you mail it a third time, you send them a nasty letter, they still don't cash it. Then you got to sheet it to the state. It's a bunch of expense and a bunch of unnecessary overhead. The nice thing about the process I just described is when Chris gives me his bank account information, which I'm going to need to request funds for him to bring into closing, I can also get his consent to give him back any funds that may be refunds later on in the process. And a couple of days after closing, we can just RTP those funds right back in. The dollar amount is low enough that it's not an unreasonable thing to do. And all of a sudden, we're moving funds around. We're taking all that escheatment and all that process out of the process big time, which is a pain point for a lot of us. So
yeah, there's so much pain. I just bet that that $1.40 is a perfect example. You end up spending twice as much in postage to send out the letters than you would, plus all the time on top of it.
Absolutely. I think it's going to, if we do it right, it could really cut back on our achievement issues for sure, big time. So let's go on to the last slide here that we've got, Jeremy, and talk about where we really want to go next, right? So if you're going into looking at it, where do you want to go next? We talked about request for payment versus distribution of funds. Well, my recommendation would be RFP is really fun and exciting, and I think it's the game changer. It is a little early unless you want to work just with constituents in one banking area or whatnot. Otherwise, it might be not the best place to start. I personally think the best place to start would be to think about RTP payments out to consumers. I think about making those payments out, the proceeds out to the consumer. The overage funds that we just talked about to eliminate escheatment are a really great place to start, then potentially moving to real estate agents, and then into payoffs in counties and HOAs. The exact order of this isn't as important as sort of that last bullet point. So one of the things that's important to understand is, well, Rick and I talked about how one of the really nice things about RTP is when you receive it, you get a lot of metadata on it, so you know what to do with the payments. That also implies the person on the other end is expecting the RTP payment and is expecting that metadata, and you sort of worked out that handshake with them, right? So one of the things that I do want to at least caution people about as they move into RTP is sending RTP funds right away out to, say, large loan servicers for payoffs or counties for funds is definitely something you want to research. My experience with a number of the servicers and actually having run a servicer, we have a lot of automated processes that are used to handling wires and know how to scrape data off of wires and know how to mathematically apply wires to the proper account in a timely enough basis to not accrue any extra interest. You wouldn't want to start RTPing funds out to some servicer who gets it into their account, isn't sure how to process it, kicks out to some manual process, takes them 2-3 days, and all of a sudden your payoff is short a couple days interest because it didn't hit sort of their automated process. So I don't think I would jump into anywhere that you know that they may have automated processes consuming those funds until you've had some conversations and you've seen some adoption, because you certainly don't want to be the one that sort of blazes that trail and ends up maybe having to collect extra interest on payoffs and that sort of thing. So certainly things like payments to consumers and to real estate agents and such, I look at it, and the advice I give our operations and offices is, sending RTP out to people that are going to look on their phone and go, oh, good, there's the money from such and such. I was expecting that. Those are good places to send it. If you're sending it into a big machine that's getting a lot of money electronically all day long and thousands of payments, servicers, counties, HOAs and such, You may want to wait a little bit so you know they've got their arms around how to process the RTP inbound payment. So that's kind of my advice on how to get started. If anybody else has any other thoughts or comments, feel free. Otherwise, we can start looking at a couple of questions here.
No, well stated.
Just add on, it's always good to have those conversations, identify your processes, have discussions with your banker, who you're working with, and yeah, agreed.
For sure.
Absolutely. And I mean, some of these are exact ways that we've seen title companies that enabled RTP even several years ago, utilizing it to pay real estate agents, and then cash to close, or not cash to close, cash out on refi deals back to consumers. We've seen as one of the places where it really started early on, when the limits were even only $100,000.
Yep, makes sense.
All right, looks like we're on our last poll question here, right, Jeremy?
Yep. Gentlemen, thank you. Lots of great information on real-time payments and where this is going. It's pretty exciting, to hear, the potential to disperse in-person real-time settlements. Jason, that's pretty cool, especially trying to combat wire fraud. We do have one more poll question, so it's already active. Please answer here the whether or not your company's in the ALTA registry. There is some extra incentive now to make sure your company's listed. It's the sole provider of title and settlement agent data to the MISMO e-eligibility exchange. And basically, this is a new platform that will help determine how digital a transaction can be, and could be helpful generating business from lenders for your company. We'll close this poll. We'll move to a little bit of Q&A. Guys, a lot of interest here. I almost feel like we're doing a RESPA webinar or a pre CD before the closing disclosure, the new mortgage disclosures were implemented. One of the questions that we got from a few people off the top of the webinar is, how do RTPs impact OFAC requirements?
So great question. I'll go ahead and take that. The same OFAC requirements will apply to RTPs that also apply to wires. And what most people probably don't realize as well, ACHs are also run through OFAC also as well. So any payment type at your financial institution is ultimately scrubbed. Any of those electronic payment types are scrubbed against the OFAC lists. The one thing I would add around that, though, is with the ability to include more data, it should enable you to be able to cut back on like levels of OFAC hits. So a lot of the ones I know that we see at US Bank are because of names being shortened or acronyms being used, or leaving off a first name and just putting a last name, where we're having to come back and get additional data on that type of information. Well, you'll be able to include much more robust information along with the payment that would be able to help move that payment along faster.
We've got a lot of thanks, Rick, for that explanation. We've also got a lot of questions surrounding who's doing RTPs, what title companies can do RTPs. The majority of our member companies are smaller operations, less than 10 employees. So the question was, can a smaller title company do this? And I guess there's two things. One, what does your good funds law say? And two, do you bank with an institution that provides this?
Yep, exactly. And you're exactly right, Jeremy. So as long as it fits your good fund statutes for your state, right, and is an acceptable payment method, and your bank is an RTP enabled institution, you would have the ability to initiate RTPs, and you would just want to work with your banker and institution on getting that service set up. And then to answer further, the list of RTP participating banks is actually out on the clearinghouse's website. They list and update regularly the institutions that are currently on the RTP network.
And the other thing I would mention too is it's probably worth having a conversation also with whoever your software provider is. So I'm not familiar with all of them, but I can tell you that SoftPro, which is ours, is actively engaged in integrating RTP into their banking tools, and I would imagine that the other ones are also. So that would be a good conversation place to also start too.
Yeah. The Clearinghouse's website actually has great FAQs that are very helpful. I would certainly recommend them to anybody who's interested in exploring real-time payments.
Three more.
All right, I know we're already at the top of the hour. If you guys don't mind, we'll just try to answer one or two more questions. One more about initiating and sending. So does the sender and the receiver, I'm guessing they both have to be on the network, right?
Correct. Yep. So they have to be enabled on the RTP network to initiate, and then it also to receive an RTP the same.
Okay. Trying to glean through here and see if there's another common question here. A lot of very specific scenarios. So I know we're already at the top of the hour, and I know some of the speakers have other commitments. So we'll wrap up. And again, if we didn't get your question, please feel free to reach out to the speakers. Their contact information is on the first slide of the presentation. If you missed any parts of today's webinar, or if you think others in your office would benefit from listening, as we said, recording of the presentation will be sent an email tomorrow. It will also be posted on Alta's website at alta.org/webinars. The link to submit information for your CE/CLE credit is in the chat box. Again, if you have a question about that, please email education@alta.org. Before wrapping up, I do need to thank Software once again for sponsoring today's webinar. And with that, that will bring us to the conclusion of today's presentation. Chris, Jason, Rick, thank you for joining us and showing us where the transfer of digital funds is going.
And absolutely, and feel free, just like Jeremy said, if you have questions, feel free to reach out to us. I know we'd all be happy to answer any questions via email. So please take advantage of that if you'd like.
All right. Well, thank you. Take care, everyone.
Thank you, everybody.
Thanks, everyone.
Thanks, everyone.